And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. As usual, another exciting week, I would say. A lot of bouncing around, but the ball did end in a particular spot, if you will, that I will share with you so that we can be all better prepared, not just for next week, but going forward. So let's go ahead and take a look at today's agenda. First up, as always, we are going to go ahead and take a look at the current markets. How did we end the week? Are we looking constructive going into next week? Also, there was a lot in the way of what I call pro picks, where individuals as well as a very large pension fund made moves, and there were certain stocks that responded very positively. So we'll take a look at some of those names. Also, trends taking place in earnings. Many of you may think, and rightfully so, that earnings season is behind us, but we've had a bit of what I would call a resurgence, a number of retail stocks as well as tech. So we're going to take a look at that, because there are what I call trends taking place, because next week we have more notable names that are going to be reporting. So you'll want to know what is taking place as it relates to stocks going into and then after reporting. Also, the art of downtrend reversals. I'm just going to share with you some examples and take a look at some current names that look constructive relative to that. So let's go ahead and take a look at some of the headline news, economic data that took place. One of the most impactful last week was that the Federal Reserve did hint at potentially shifting their monetary policy. They've been very generous. There was thought that they might, in fact, raise interest rates by the end of the year. However, upon closer inspection, they really, there's not a decision that's been made. More is being weighted on keeping the policy the same, but nonetheless, the markets did get spooked midweek. Also, jobless claims came in yesterday, weekly jobless claims, and they're now at a pandemic low. This is good news, certainly for the economy and then also the markets. Earlier in the week, we did see July retail sales slump by over 1%. This was something else that kind of on Tuesday spooked the markets a bit, with Delta variant fears having consumers potentially pull back from their buying activity. And of course, consumer spending is almost 2/3 of US GDP. So this is something that will rattle the markets, if you will. And also, we did see that recent move into cyclical sectors. It does appear to be fading. We're going to get into that a little bit more. Next week, we have durable goods orders, and then some of these personal income and consumer spending numbers could easily have the markets being just a little bit jumpy, if you will. So let's go ahead from here and take a look at the markets. So this is a daily price chart of the S&P 500. The pullback that I did mention, the S&P, for instance, did pull back below its 21-day simple moving average, but we are on the mend, if you will. Subscribers to my MEM Edge report will know that on Wednesday, after the market's sharp sell-off, I was advising that we are in good standing. The markets are fine, and really using the other pullbacks fear-based as precedent, whether it was when the Delta variant was first announced, inflation fears, and so on. The markets have been able to bounce. Your big backdrop that is helping the markets is a continuation of not only strong quarterly earnings, but management guiding higher into the remainder of the year. So that is remaining one of the real boost that the markets is experiencing. So we can see stochastics did dip into negative territory, but overall, we are in fine standing with the S&P. And then from here, let's go take a look at the NASDAQ. It did sell off a bit more and further than the S&P 500. It dipped below this 50-day simple moving average. And those that follow my work will know that a break below the 50 can be a red flag, but the NASDAQ did manage to close the day above that. Very bullish behavior, nice volume on that move back above that 50-day. And then subsequent to that, we are potentially, in fact, in the throes of reversing this pullback. The RSI is positive. Stochastics down here, but they are, if we get that black line up through the red, similar to late July, we should be in very good standing with the NASDAQ as well. So let's go ahead, take a look at some of these underlying sectors. Of course, we always want to be in front of where the strength is in the broader market. So this is a 2-month daily price chart of the 11 sectors. I've gone ahead and added that relative strength indicator, descending order. So up here in this quadrant are your stronger industry groups. At first glance, we can see a bit of a defensive feel. Utilities, healthcare up here, staples. There are other dynamics at play here, however, higher interest rates in the face of inflation. These staples stocks, many of them have very powerful branding in place that will help them really ideally override inflation that we are encountering. Healthcare, lots of dynamics taking place here that I hope to get into, but one of them certainly is the continued Delta variant spread. News this week that the US government is recommending booster shots beginning September 26. So a lot of vaccine related stocks are on the move, and then other strong growth names where it is, we are having in the US an aging population, so they're providing products to that area. And then let's take a look, because REITs are also defensive with that higher yield, but technology has snuck into this forefront here. So what we can see is this is a pullback similar to the markets, but technology has fully recovered XLK. So we can see the RSI is positive. The MACD still just trending downward, but that is what occurs when you're in a bit of a back and fill. But we are on the lookout for a nice black reversal line up through the red, which would be quite constructive. But it is good to see tech up there in the forefront. As we drill down, we can uncover precisely where that strength is in tech. But let's move on, because we talked about cyclical stocks. This was that nice rally about a week and a half ago into industrials, and we can see that it is unfortunately fading and doing so on fairly big volumes. So so the move into this area, industrials, let's go ahead and move on and take a look at basic materials. There are a couple of areas cyclically that are potentially holding in. This is XLB, the materials. We can see it's pulling back. As we move on, I'll share with you other dynamics that are impacting these cyclical stocks as well. Discretionaries continuing to suffer overall. There are some bright spots in here, but for the most part, a lot of travel related names, and then select retailers are really getting hit quite hard. So this is another cyclical area as well. And so from here, let's go ahead and move on. We want to take a look beyond those sectors, get a really good feel for some of these sub-industry groupings. Again, RSI descending. And then first up here is the US dollar, which has been climbing certainly this week. And of course, the higher dollar is going to lead to lower commodity pricing. So that's that basic materials decline that we're seeing. Talked about tech coming up into the forefront, and this is one of the reasons. IGV, this is the software ETF that pulled back. It really had been in a rather go nowhere environment for some time, pulled back with the markets, but a nice recovery, decent volume, and there are definite bright spots. As we get into that earnings dynamics, I will share with you some of the names in software that are bubbling up to the surface, if you will. And then from here, we can take a look at some of these other areas. Let me just see. Here we are with the yield. We want to keep our eye on the 10-year yield. And this was, we did see an uptick in rates, but since then, interest rates have been generally declining. They're down just a little bit this week. One of the most impactful groups from there is going to be bank stocks. This is KRE, regional banks. But we can see it's ending the week somewhat constructively. We're not entirely, this downtrend reversal may re-emerge. Certainly bigger bank stocks. Again, my MEM Edge report, we have several names that are acting much better than that regional bank ETF. And then one other area that I did want to highlight is semiconductors. They've been deteriorating. A lot of news about oversupply of memory chips in the face of low demand. But we did see a nice 2-day late week rally. Again, bright spots in here as well. So let's go ahead and move on from here, because what I want to do is jump right in and share with you some of the names that came out with earnings this week. And first up, we can take a look at Walmart. I'm going to be focusing on these bigger, better known stocks. So Walmart came out with their numbers, but what we saw going into the report is a rally going into this week's release. So overall, Walmart, it was up probably about 1.2%. So that's a dynamic that I wanted to share with you. When you see these stocks rallying into earnings relative to those that pulled back. So Walmart, as an example, rallying into earnings. I'm pointing this out because a number of the names that are due to report next week have seen rallies this week. So let's take a look at another name that had a pretty extensive rally, not just right before earnings, but certainly going into earnings. This is Target, TGT. They did come out with very good numbers. The decline here is all about management talking about their in-store sales potentially, or actually online sales potentially diminishing due to people getting back out and about. It did drop below this 50-day, but poised to turn. But again, that rally into earnings and the dynamic that took place. So from here, we're going to take a look at stocks that pulled back going into their release, because as I mentioned, Target was down about 3% on the week. Let's take a look at Lowe's. So this is a pretty significant dip here. This is because Home Depot, their rival, came out with poor numbers. So a sympathy sell-off in Lowe's. Lowe's, in fact, came out with very good numbers, and we can see the subsequent rally. Lowe's was up almost 10% for the week. So that pullback as opposed to a rally. Let's take a look at another stock that had a pullback going into earnings. I probably don't need to show you too many before you get the gist of this, but this is Cisco. And we can see that the stock did pull back, not dramatically, certainly not similar to Lowe's, but in general, a pullback. The company reported and rallied out of there up about 3.2%. One other name that we can just take a quick look at as it did pull back. Actually, we had a couple of really big jumps. This is Macy's, pulled back, released, and is up 17% for the week. Huge volume characteristics. This stock definitely wants to trade higher. We can take a quick look at Kohl's, pull back into earnings and rally. So we have that. We are going to take a brief break, and then when I get back, I'm going to share with you names due to report next week, and we can share and look at this dynamics from there. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. So from here, as mentioned, we're going to take a look at several bellwether, higher or better known stocks that are due to report earnings next week. Again, keeping last week's dynamic in mind. So here's Salesforce CRM. They are due to release on Wednesday. And this is an example of a stock that has rallied going into their earnings. Now, it doesn't mean absolutely, because it was up really only 1.8% for the week. It's not an absolute that it will not respond quite as constructively. This is merely using precedents as a potential to help you outlook. So help you carve an outlook going into earnings. Of course, from my work, I am not going to buy stocks going directly into earnings. Maybe a week plus out would be more interesting to me, but many of you may use options. So this kind of tutorial, if you will, can be quite useful. But here we are, Dick's Sporting Goods, DKS, due to report on Wednesday. This has been a big winner for the MEM Edge report. We did get into the stock right before. This is their last quarterly release, big gap up, but you can see it had that pullback going into that earnings and then subsequently has been a nice winner. DKS did pull back, but it's now close to even with its prior high in price. So keep an eye on that one. Next up is a company that is really down and out going into their numbers. This is Palo Alto, PANW. We've seen these security software stocks really pull back pretty dramatically. So this company is due to report on Monday. So it will be very interesting because, again, I always like to look at historical precedent as it relates to earnings. So this is their Q1. The company also in a depressed mode, gapped up, pulled back, but then rallied pretty significantly. So we will keep an eye on PANW. Another name that is coming out with numbers on Tuesday, Software, Intuit. It is one of those more stretched, if you will, very similar to Target going into their numbers. So we're going to need to see perfection for ideally for Intuit to continue higher. And then one last name that we can look at, a retailer that is coming out with earnings, is Burlington. They're coming out on Thursday, and we can see that it has pulled back. So it'll be interesting to see what they do before Thursday. The company is in an expansion mode as far as opening a lot of new stores, and they are seeing growth relative to their peers. So that's the interesting thing that is going on with earnings relative to those that have reported and those that are due. So from here, let's go ahead and take a look at some of these downtrend reversals. So what I am going to share with you are what you need to be on the lookout for as far as these reversals. So let's start with CHWY. This is an online, Chewy is the company, online, all about animals company. The online sales only is what I'm trying to say. And they've seen quite a bit in the way of growth, but I wanted to point out this concept. It was a big winner during the lockdown. A lot of people did add pets to their family, big growth in sales for Chewy. But then subsequently, it had a very big drop. We can see at the peak in price here, it got up to about 120 and then down here 60. So 50% decline. Now, the reason I'm pointing that out to you is when you are looking to potentially play, if you will, or take advantage of potential downtrend reversals, knowing that about this 50% decline, and actually the length, it lasted pretty long, it's going to take an awful lot to reverse that downtrend. You have a lot of people that it may have gotten in here, here. They're waiting for the stock to get back up in price so they can sell. So we can see we've had several downtrend reversals that just are not taking shape. I believe they're due to come out with numbers next week, so we'll keep an eye on Chewy. Another one that I wanted to share with you that was equally lengthy in its decline and did struggle, but eventually did execute that downtrend reversal. This is Lululemon, another big winner during the, certainly in the beginning of the pandemic. We're looking at a daily price chart. Here's their peak in price back here in August, and it did get very sloppy, got up close to that prior high. So we'll call it 390. The stock got down to 240. So significant decrease, even higher decrease from this peak. So again, that concept that when you're on the prowl for a downtrend reversal, oftentimes it will take more than one attempt. Now, for me, a reversal is described as having broken back above each of its simple moving averages. You want to see that occur on volume, and then you also want to marry your outside momentum indicators being in positive territory. So oftentimes when these downtrend reversals fail, they do so fairly quickly in this case. So it did take a secondary attempt before Lulu was able to really effectively reverse its downtrend and trade to higher highs. So from here, let's go ahead and take a look at another stock. This has been a nice winner on my MEM Edge report, downtrend reversal, but the reversal was much shorter, and you'll see the difference. It's not, this is Autodesk ADSK, and I'm keying in on this downtrend here. But again, it did take a couple of attempts, and then eventually, this is when we picked the stock up, it did reverse its downtrend. Let's take a look at some of those dynamics that got us into the stock. Certainly earnings was one of them, nice volume as it's reversing the downtrend, positive outside momentum indicators, and we can see that the stock has had a very nice advance. Autodesk is due to report next week, and actually that is not the stock that, that I was going to show you. Oh my goodness. This is not a part of the MEM Edge report, but it does have a very similar look and feel. This is MEM Edge report, downtrend reversal. I was wondering why it looked so different than I envisioned. So here, what I wanted to point out to you with Adobe is the fact that its pullback from this near-term high in price was not that lengthy. It was not similar to Lulu, certainly CHWY. It was a 3-week pullback. So let's go ahead and take a look because this has been a nice downtrend reversal stock and really just a great example. So here is when we got into it. The stock did reverse its downtrend, breaking back above those simple moving averages, nice volume characteristics, nice upside momentum taking place here. And then we can see the stock has subsequently generally traded higher and had a nice upward move from here. So that is the difference. Again, the length of that pullback is going to be impactful, the percent from that peak to its low. So the longer and the higher the price deterioration prior, the longer that downtrend reversal is going to take as far as materializing. So let's go ahead from here. I talked about some of these pros that are out and about, that headline news. First up is Warren Buffett. He did, of course, as all funds, filed with the SEC as far as activity during the second quarter relative to his holdings. So there were a couple of stocks, and it's interesting to me how much of an impact. Of course, every quarter we do see this. First up is Kroger. This is the retail grocer that Buffett did already own, but he increased his holding by 21%. So the news came out here. Just take a quick look here, and you'll see really how impactful it was as far as the stock now being thrown into an uptrend. But at this point, certainly your MACD is up here at the very upper quadrant. Your RSI is overbought. It's more of a just pointing out something dynamic that took place last week, something that you can be on the prowl for when he releases this quarter's activity. We can take a look at a couple of other stocks that he did add to that he already owned. This is AON Insurance Company. They had already come out with strong numbers here, but then subsequent to Buffett's getting into the stock, he did actually, it increased further. And as it relates to Buffett's stocks that he's very highly concentrated in, there are 4 stocks. First up is Apple, poised for a breakout, pulled back, but quite constructive looking there on Apple. Another name that Buffett owns quite a bit of is Coca-Cola, KO. In that retail space, they came out with good numbers, kind of a sideways move there, but moving right along. Another major pension fund, they did come out and announce, and it's interesting to me that they've already garnered their position in the stock, but I believe that it's because their belief in the company really helped propel the stock. So we're talking about Netflix and FLX. And take a look. This is a daily price chart. It had this big advance yesterday. And interestingly, it is adding to that move on the news. What I wanted to point out from here is this big volume on this move, and then also that your MACD is just now poised to turn positive on the daily. We have a positive RSI, so we could see higher move from here. What I'm going to do is go ahead and share with you an intra-day chart that can be really quite constructive. I usually use 1 hour if I want to drill down. And so here we are. This is that big move on the CalPERS purchase news. And then from there, it really has held in quite well above this 5 and 13 hour moving average. We are certainly due a longer period of consolidation, but potentially keep an eye for a continuation rally in this particular stock. So let's go ahead. I think I only have a couple of minutes left, but I do want to share with you. I talked about that move into healthcare and how certain stocks really are benefiting. In researching this further, as far as companies that are on the cusp of delivering even more vaccines. At this point in time, only 24% of the world is fully vaccinated. As it relates to delivering globally, Pfizer is really at the forefront. So here we are with the daily price chart. A bit overbought, no doubt. You can see on this MACD, we are due a pullback, and that pullback would be really quite constructive in the sense that the growth prospects are just there. We could see a continued move higher. Another name that we can look at very quickly here is REGN. This is Regeneron. They do have a antibody cocktail, and today Goldman came out and put a increased price target on that stock, or I'm not quite sure, but Wall Street did. And so we can see it's in a very confirmed uptrend. From here, we can just take a look at that 5-day simple moving average. Can see that it's finding support there. And then one last small cap stock. This is the one that Goldman put a price target at 19 on. And this particular company has a key input or component to each of these multiple vaccines that are out there. So it is pulling back very orderly. I would say a break back above that 10-day on Dynavax could really be very interesting for the stock, putting it into a nice buy zone with that $19 price target. So I'm going to leave it at that. If you like what you've heard, go ahead and hit that like button. And for those of you that have not already, take a trial of my MEM Edge report. I have that special where you can get this biweekly report for only $7. Everyone, Have a great weekend, and I will see you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.